I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular. Of course, he has the very accurate and free site, traderschoice.net, where you can see all of his trades in real time, his winners and his losers. And he's got a lot more winners than losers. I'm talking about Gregory Mannarino, coming to us from Las Vegas, Nevada. Greg Mannarino, thank you for joining us today on USA Watchdog.
Thanks for having me, Greg. I always love being on your show, really.
Well, we love having you, and people have actually been asking for you. I had some nice compliments on you just recently and saying, hey, I'd rather have you on twice than some other people, and it was very nice. The other people are nice, too. The other people I've had on as guests. But I want to talk about this Russian jet. Bad juju. I mean, Turkey says it's in their airspace. Russia says it was in Syrian airspace, and they've been invited to fly bombing missions. The Russian pilots supposedly, reportedly, were shot at or shot and killed while they were parachuting down. I mean, either way it goes, this is a very much of an escalation. How does this affect the markets, investing, things like that you're watching?
Greg, I believe sincerely what we are watching right now is something that you and I and a lot of people have been talking about for a very long time. Every single thing that we've been witnessing over the past few years has been moving us closer and closer into war. I can't imagine how many times I've been on your show stating that this is the goal. Look, here's the sad reality that we're all facing right now. We exist in an environment where central banks are getting so desperate that they need to continue to invent reasons to borrow cash into existence, and war is one of them. Okay, so regardless of anything else, look, without sounding like a conspiracy theorist here, has been in the cards for a very long time, and every single move on the world chessboard is being moved on purpose and for quite a while now to build us up towards what is coming, and that is, beyond any shadow of a doubt, another world war. I wrote about this in my books, my free brief. It's not a brief. It's a 197-page ebook, which is available on my website, traderschoice.net, Ultimate Guide to Money in the Market.
We're talking about the politics of money, this right here?
Yeah, that's included in there as well. In fact, all of the work I've ever written is included in my free ebook. I really hope people get it. Greg, almost 75,000 copies have been downloaded already. Free, 100% free. There's no catch here. And in there, I speak about where this is going. This is being done on purpose, Greg, here, and this is going to get much worse. Look, this is something else that I really hope that people understand. The United States military is the enforcement arm of the Federal Reserve. As a matter of fact, all the world's central banks' enforcement arm is the military. Period. How do we know this is true? Just look up the petrodollar. So this is being done on purpose, and I actually put a warning out to millennials out there in one of my recent videos. I said, you guys better start waking up and opening your mouths and not get distracted by the garbage that's being forced down your throats here, because all of the millennials out there are going to be the ones whose blood and guts is going to be spilled all over this world. It ain't going to be old dudes like me, Greg, that are going to be fighting this war. I put my time in anyway. But this is where we are going with regard to the world. We are on a war stance, and it's going to get very, very ugly moving into next year. And the shooting down of this jet here by Turkey, I also heard that one of the helicopters got shot down as well. This is going to escalate. They want this to escalate. Again, central banks need reasons, any reason, to borrow cash into existence because we have a debt-based economic model, Greg. It's not a wealth-based economic model. And a debt-based economic model demands that cash be borrowed into existence at all costs. And they're going to grease the war machine wheels with the blood and guts of whoever they need to do to fight it, period.
I want to, the central banks have to be saying they have better information than we do, but overtly, the information, whether it's Baltic Dry Index, which is plunging from a much lower level than '08, the housing starts, the retail sales, I mean, just about every metric of the economy is doing, down, which is maybe why this is Goldman's headline. This is from, what is it, Zero Hedge, and it says, Goldman Sachs says sell and go away. What does it say? Sell in December and go away, while Goldman Sachs sees market going nowhere in 2016. Of course, you made the market top call back in, I believe, May of this year and said, it's it, that's topped out, it's over. And you had charts. You were very overt about it. It wasn't a maybe. And is the Fed seeing the same thing we're seeing? The market is topped out. That means the economies have topped out. That means we're not going to grow our way out of this debt, that it's going to implode. Is that what the Fed and central banks are seeing?
Greg, these world central banks, let's put this into a perspective to a certain degree. What they have tried to do by their quantitative easing, by their stimulus, by cash printing out of thin air, is pull demand forward or from the future. But again, all of this has to balance out. So, but their plan has failed miserably. Okay, we are clearly in a global slowdown. This is why world central banks are talking about cutting their interest rates, while the Federal Reserve is talking about raising interest rates here. There is so much in play right now, and I do believe that in history we have never seen a greater failure by world central banks in an attempt to stimulate a corpse. Okay, the 2008 event, Greg, that was the party over moment, period. And all we have now, and I've been saying this since day one, is a terminal side effect. So what are they going to do? No, they're going to bring us to war. This is the next step, and we're watching it unfold. This is the collapse, Greg, that all of us have been talking about. Now, forget about the stock market. It is absolutely disconnected from reality in every shape or form you can think about. We are now existing in economic and financial fantasy land, okay? The market top from May, it has held until now. Will it continue to hold? You know, here's what I'm thinking now, honestly, with regard to that. I do believe it has the potential to hold, but there's a few things right now that are in play by these world central banks. Why is the market up on this shooting down of the jet, this Russian jet here, and a possible shooting down of the helicopter as well, and the dead crew as well? Because they're expecting world central banks to continue something. Mario Draghi has been broadcasting to the world that he's going to be easing, he's going to be printing, he's going to be doing whatever it takes to boost up the economy. So Mario Draghi sees what's going on here. Terrorism on the rise all over the world. This horrific attack that we had here in Paris. We had another one here in Mali. We got this war thing building up. So this is going to give him an excuse to print and stimulate. Now, that is going to have an effect on the markets, and that is why the market is higher today. There's no reason for it. And I'll tell you something else. The Federal Reserve here, they're going to do something next month. The Fed is, frankly, screwed. Okay, they're going to have to do something, in my opinion, here, to remain credible. Because, look, confidence is the only thing keeping this farce going. Okay, so if the Federal Reserve, I want people to pay attention to this. If the Federal Reserve does not raise rates next month, it is, again, a huge no confidence vote for the U.S. economy, and that is going to melt down this market. I know I'm on the opposite side of the page. There's a lot of guys out here saying, hey, you know what? If the Federal Reserve decides that they're not going to raise rates, the market's going higher. I can't imagine why it would do that. Again, a no confidence vote in the U.S. economy. And again, the Federal Reserve needs to remain credible. If they do not act, even in a minute way, there's going to be a worse problem than if they do act. And that brings me to the next thing I want to talk about. This freaking, I'm going a little crazy here, but this secret meeting, this is what they were talking about, in my opinion.
You think they were talking about whether they should raise rates and what's going to be the fallout and how we manage it? Listen, David Stockman has said in September, he said they're going to have to raise rates before the end of the year. Even ultra dove Catherine Austin Fitts, who's very smart, comes out and says, I give it a 50 to 60% chance they've got to raise rates. They're going to have to raise rates. And they'll just do a quarter of a point. I said, and I told her, what about 1% federal funds rate? And the look on her face was disaster. Isn't this still going to be a disaster? I mean, aren't they saying, well, we're going to raise rates, ding, ding, ding. It's going to be the top of the bond market, the bottom of the interest rate curve. It's going to go up from there, and bonds are going to go down as they are inversely correlated. So if they raise rates, isn't that also, that's not going to calm anybody down? Everybody's going to freak out. Aren't they going to sell?
Absolutely, but I think the Fed is discussing the lesser of two evils here.
Which is what do you think the lesser of two evils?
The lesser of two evils, in my opinion, is going to be they're going to nudge rates higher.
Oh, okay.
Because if they don't, Greg, again, what does that mean? I mean, it's the largest no-confidence vote in the U.S. economy that you can possibly imagine because, again, it doesn't fit the narrative. The narrative is we're recovering despite all the stuff you covered earlier. The Baltic Dry Index, money velocity still at a historic low here. We have labor force participation rate at historic lows as well. I mean, you could go on and on here. And this is the reason why we're not seeing all of this inflation. In fact, we're stuck in this deflationary cycle right now. Why? Because of demand, global demand here. So they are so pressed into a bad spot right now, these world central banks who have failed in their attempt to pull demand from the future to spark some type of a recovery, which never happened here. And despite unprecedented action, which we have never seen the likes of in the history of finance, did not work. You can imagine the price that's going to have to be paid for this moving forward. Look, these world central banks, Greg, something you and I have spoke about, are not done pulling stuff out of a hat, trying to do whatever they need to do, back door, front door, sideways, and every other way you can think about. If the Fed does nudge rates here, which I think is a high probability they're going to right now, just to remain credible, again, and it's the lesser of two evils, in my opinion here, they're going to continue to print cash out of thin air at a blinding pace. In fact, we might even see that even go up from their current money printing binge and everything else that's going on here. And war, Greg, is the goal. What people need to understand is the goal right now of these world central banks is to bring us to war. So they have a big reason to borrow cash into existence. This is it. The debt-based economic model has got to be the most corrupt, evil, and dastardly mechanism ever to be pushed down the throats of the entire world. And they're going to do whatever they need to do. And that means bring us to a full-blown war, nuclear, whatever they need to do to keep this going. Because if they don't understand what the ramifications are, if they do not find reasons to borrow cash into existence, creating refugee problems, leaving our borders open, war, you name it, whatever it has to be, then we're going to face, again, another horrible set of events. The world central banks have created an environment where they have to borrow cash into existence in perpetuity, can never stop. If they do stop, again, we will be facing a resource issue, the likes of which will cause a loss of human life greater than a nuclear exchange. So they're stuck here. And the lesser of the two evils there is to bring us to war. That is, as horrible as that sounds, that's where we're at.
And I want to talk about the interest rate rise. Are they doing it because they're afraid our bonds will sell off, that the U.S. and people are going to say, well, then the economy is no good. They're not going to grow their way out of it. We might as well sell these treasury bonds. Saudi Arabia has been talked about a long time, and I'm hearing rumors again about how they could, start accepting any other currency along with dollars in oil trade, because it looks like we're moving away from them in terms of, moving towards Iran and away from Saudi Arabia. So are they raising the interest rates is another reason why, is to protect our bonds, protect the dollar? Like, wow, they're raising rates. Is that why?
Well, Greg, look, what do we know to be a fact here? Let's talk about it. And something you and I have spoken about on air and off. The debt is no good. All of it. It can never be paid back. It is not an asset in any way, shape, or form here. So if we know that, and we also realize that world central banks refuse and cannot allow fair market value to be realized with regard to the debt, you can understand where this is all going. They cannot do this, because if the fair market value were allowed to manifest itself through the mechanism of a free market, the debt would be worthless.
They'd have to jack rates so high. What you're saying is that rates would have to go so high then they'd never be able to pay it. And right now there's this shroud of they might be able to repay it if the rates are low enough. But you're saying it is so high that the market would take over. They set the rates at, for our 30-year bonds at 8% or 10%. They set our 10-year bonds at 6 or 8, 7%. That right then, boom, game, set, match. That's what you're saying. So they have to be at least proactive.
Well, they have to try all they can to keep the illusion real. The illusion is that this debt has value. The debt has no value. It's worthless. It can never be paid back. So we have a world economy that is 100% dependent on an asset that can never be paid back. It's worthless. So you can see why we are marching toward war right now. It's unfolding right before our eyes here. This has been the plan of these world central banks since forever. Since the collapse of 2008, what has happened here in the United States of America? We have watched our national debt double. It took 220 somewhat years to build up the first half of it. 224, 25 years, whatever, something like that. We have doubled that in the last 7 years. So you can see how extreme this is. Again, we can't pay it back. It can never be paid back. It's worthless. The currency is worthless. So all of this is going to be a terrible price to pay here, Greg. There's no doubt about it. And just goes back to my premise since day one. Become your own central bank. That means acquire hard assets. That's these unbelievably suppressed prices. We understand what's going on here at the COMEX. I think it's common knowledge right now. And again, to understand that the debt-based economic model is a dead man walking at this point. Yes. And the world central banks have no choice here. They have two scenarios. One, bring us to a global war, which they're doing now. Or two, stop borrowing cash into existence, which they can't do. And either scenario is going to result in a massive loss of human life. So they're gonna take the war stance to blame it on. You understand? This is where it's going. It is horrible.
Well, I've long said that we've been told debt is money, Federal Reserve notes, and debt is an asset, and we're going to find out stunningly that neither is true. Gregory Mannarino, thank you for joining us today on USAWatchdog.com. Gregory Mannarino, TradersChoice.net, free. It's all free. There's nothing on there you charge for. I think you got some Google ads. But anyway, Gregory Mannarino, TradersChoice.net, thank you for joining us today on USAWatchdog.com.
Great to be here. Thanks.